Based on the historical data and forecast, Bitcoin shows a slight upward trend with periods of consolidation. The RSI fluctuates around the mid-level, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening recently, suggesting increased volatility. Considering these factors, I recommend a moderately bullish strategy. We will initiate a long position when the price touches the support level of $64,100. The stop loss will be set slightly below the support at $63,800 to account for potential price fluctuations. The initial target price will be the resistance level of $65,000. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI falls below 45 and the price is near the bottom band of $59,900, we will enter a long position with an entry price of $59,900. The stop loss will be set at $59,000, and the target price will be $64,000. Conversely, if the RSI rises above 55 and the price touches the upper band of $66,300, we will consider a short position, but given the overall upward trend, I prioritize the long strategy. Therefore, the primary strategy remains a long position at $64,100 with a stop loss at $63,800 and a target price of $65,000. Based on the historical data and forecast, Ethereum shows an overall upward trend, consistently bouncing off the support price of $1,840. The RSI values fluctuate between 51.8 and 66.3, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increased volatility, and the price is currently approaching the upper band. Given the forecast of 1870, 1870, 1870, 1870, 1870, 1880, $1,900 for the next week, I recommend a long position. We will enter a long position at $1,860, placing a stop-loss order at $1,840 to protect against a potential downturn. The initial target price will be $1,900, aiming to capitalize on the forecasted upward movement. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. When the RSI falls below 30, consider entering a long position. When the RSI exceeds 70, consider exiting the long position. If the price touches the lower Bollinger Band, it signals a potential buying opportunity. If the price touches the upper Bollinger Band, it signals a potential selling opportunity. For this specific scenario, I propose holding the long position until the price reaches $1,900, or until the RSI reaches 70. If the RSI reaches 70, exit the position at $1,880. This combined approach leverages multiple indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, BNB shows a slight downtrend with support at $567 and resistance at $575. The RSI consistently fluctuates around the mid-range, indicating indecision. The Bollinger Bands suggest periods of volatility, with the price occasionally touching the upper and lower bands. Considering the forecast prices, which predict a decline to $563, I recommend a short selling strategy. Entry price will be $571, with a stop loss placed slightly above the resistance at $575 to limit potential losses. The initial target price is $563, aligning with the forecast. To refine the strategy, I will incorporate RSI and Bollinger Band signals. When the RSI dips below 20, it signals an oversold condition, suggesting a potential bounce. Conversely, when the RSI exceeds 80, it indicates an overbought condition, signaling a potential pullback. If the price touches the bottom of the Bollinger Bands, it suggests a potential rebound. Therefore, the portfolio will consist of 60% short positions with an entry price of $571, a stop loss at $575, and a target price of $563. The remaining 40% will be held in reserve, ready to capitalize on potential rebounds triggered by oversold RSI or Bollinger Band signals. This blended approach seeks to maximize returns while mitigating risks. Based on the historical data and forecast, Solana exhibits a downtrend with periods of consolidation. The price has consistently faced resistance around $77.8, while support remains firm at $75. The RSI consistently hovers around the mid-range, indicating neither strong overbought nor oversold conditions. However, the Bollinger Bands suggest potential volatility. Considering these factors, I recommend a strategy focused on short-term price movements capitalizing on the established support and resistance levels. My proposed strategy involves a combination of RSI and Bollinger Band signals. We will initiate a long position when the RSI dips below $47.5 and the price touches the bottom of the Bollinger Bands, indicating a potential oversold condition. The entry price will be $72.7. A stop-loss order should be placed just below the support level at $74.5 to mitigate potential losses. The target price is set at the resistance level of $77.8. If the price reaches $77.8, we will take profit and exit the position. This strategy balances risk and reward, aiming to capture short-term gains within the defined trading range. Based on the historical data and forecast, TRON shows a sideways trend with price fluctuating between $0.323 and $0.332. The RSI indicates that TRON is currently within the neutral range, with values between 44.4 and 57.8. The Bollinger Bands have been relatively stable, suggesting low volatility. Considering the forecast prices, TRON is expected to remain within a narrow range, around $0.324 to $0.328. Therefore, a range-bound trading strategy is suitable, focusing on short-term price movements within this established range. I recommend a strategy that combines RSI and Bollinger Bands. When the price touches the lower Bollinger Band, around $0.314 to $0.316, and the RSI is below 50, enter a long position at $0.318. Set a stop-loss at $0.313, just below the lower band, to limit potential losses. Target a price of $0.33, near the resistance level and the upper Bollinger Band. Conversely, when the price touches the upper Bollinger Band, around $0.334 to $0.337, and the RSI is above 50, enter a short position at $0.335. Set a stop-loss at $0.338, just above the upper band, and target $0.325, near the support level. This combined strategy aims to capitalize on short-term fluctuations within the established range, utilizing both technical indicators for confirmation and risk management. Based on the historical data and forecast, Dogecoin shows a downtrend. The RSI consistently remains below 50, indicating a bearish sentiment. The forecast predicts a further decline, with prices expected to fall to $0.0699. The support price of $0.0723 has held steady, and the resistance is at $0.0835, creating a range-bound environment. Considering these factors, I recommend a short-term contrarian strategy focusing on bounces off the support level. We will enter a long position when the RSI dips below 30, indicating an oversold condition. Specifically, we will enter a long position at $0.0701 when the RSI falls below 30. The stop-loss will be placed just below the support level at $0.07 to protect against a breakdown. The target price will be set near the center of the Bollinger Bands, which is around $0.0739, aiming to capture a quick rebound. This strategy combines RSI, Bollinger Bands, and support/resistance levels for a high-probability trade. The predicted price movement is based on the current downtrend and the potential for a short-term bounce off the support level. Based on the historical data and forecast, Zcash shows a generally upward trend, although with some volatility. The price has consistently bounced off the support level of $535, and the forecast for the next week suggests continued upward movement, peaking around $567. Combining this with the RSI readings, which have mostly been above 50, indicating bullish momentum, and the Bollinger Bands, which have been expanding, suggesting increasing volatility and potential for price movement, I recommend a long position. Specifically, enter a long position at $542, with a stop-loss placed just below the support level at $534 to mitigate potential losses. A target price of $567, aligning with the forecast high, offers a reasonable profit margin. To refine this strategy, we can incorporate the RSI and Bollinger Bands more actively. If the price dips and the RSI falls below 30, consider adding to the position at $535. Conversely, if the price reaches the upper Bollinger Band and the RSI exceeds 80, consider taking partial profits at $560. This dynamic approach allows for capitalizing on both upward momentum and potential pullbacks. The final portfolio would be a long position with an initial entry at $542, a stop loss at $534, and a target price of $567, with adjustments based on RSI and Bollinger Band signals for enhanced returns. Based on the historical data and forecast, Stellar shows a slight downward trend with fluctuating price movements. The support price consistently remains at $0.184, while the resistance fluctuates around $0.189. The RSI values hover between 42.4 and 48.4, indicating neither strongly oversold nor overbought conditions. The Bollinger Bands are narrowing, suggesting a period of consolidation. Given the forecast predicting a decline to $0.18, I recommend a short position. Entry price should be $0.183. The stop loss should be set slightly above the resistance at $0.191 to protect against unexpected upward movements. The target price is set at $0.175, aligning with the bottom of the Bollinger Bands and providing a reasonable profit margin. To maximize efficiency, I propose a blended strategy prioritizing the forecast and Bollinger Bands. Initially, enter a short position at $0.183. If the price rises and touches $0.191, exit the position to minimize losses. If the price falls as predicted and reaches $0.175, secure the profit. This combined approach leverages the downward forecast while using the Bollinger Bands as a dynamic stop-loss and target price guide, adapting to the market's short-term behavior. This strategy balances risk and reward, aiming for high returns while protecting capital. Based on the historical data and forecast, Chainlink shows a generally upward trend, supported by the consistent trading above the $8.3 support level and the recent upward movement. The RSI readings have fluctuated, but have recently climbed above 50, indicating strengthening momentum. The Bollinger Bands suggest that the price is currently near the upper band, potentially indicating a period of consolidation or a slight pullback. My strategy is to implement a combined approach leveraging RSI, Bollinger Bands, and support/resistance levels. I recommend a long position entry at $8.29, coinciding with the first day of the forecast period and slightly below the recent high. A stop loss should be set at $8.2, just below the support level, to limit potential losses. The initial target price is set at $8.43, aligning with the forecast for the last day of the period. To maximize potential returns, I suggest a trailing stop-loss strategy. As the price moves above $8.4, the stop-loss should be adjusted to $8.3, and further to $8.2 if the price reaches $8.5. This approach allows us to capture profits while protecting against a sudden reversal. This combined strategy aims to capitalize on the current upward trend while incorporating risk management techniques based on technical indicators and price levels. Based on the historical data and forecast, Cardano shows a downtrend with fluctuating price movements. The RSI consistently hovers around the 40 to 50 range, indicating neither strong overbought nor oversold conditions. However, the price has been bouncing off the support level of $0.161 for the past 2 weeks, suggesting potential for a rebound. The Bollinger Bands show that the price is currently near the lower band, which could indicate a potential buying opportunity. Considering the forecast for the next week, the price is expected to continue a slight downtrend, but with some upward movement towards $0.168. Therefore, I recommend a moderately bullish strategy with a focus on short-term gains. My proposed strategy is to enter a long position at $0.161, coinciding with the established support level. Place a stop-loss order at $0.158 to limit potential losses if the price breaks below the support. Set a target price of $0.168, aligning with the forecast high for the week and a reasonable profit margin. This strategy combines the support level, RSI readings, and Bollinger Bands to maximize potential gains while minimizing risk. This is a high-risk, high-reward strategy, and should only be implemented with a small portion of your portfolio. Based on the historical data and forecast, Solana exhibits a downtrend with periods of consolidation. The price has consistently faced resistance around $77.8, while support remains firm at $75. The RSI consistently hovers around the mid-range, indicating neither strong overbought nor oversold conditions. However, the Bollinger Bands suggest potential volatility. Considering these factors, I recommend a strategy focused on short-term price movements capitalizing on the established support and resistance levels. My proposed strategy involves a combination of RSI and Bollinger Band signals. We will initiate a long position when the RSI dips below $47.5 and the price touches the bottom of the Bollinger Bands, indicating a potential oversold condition. The entry price will be $72.7. A stop-loss order should be placed just below the support level at $74.5 to mitigate potential losses. The target price is set at the resistance level of $77.8. If the price reaches $77.8, we will take profit and exit the position. This strategy balances risk and reward, aiming to capture short-term gains within the defined trading range. Based on the historical data and forecast, World Liberty Financial shows a slightly decreasing trend with some volatility. The support price remains consistently at $0.0569, while the resistance fluctuates around $0.0594. The RSI values have been oscillating between 42.5 and 49.6, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price has been fluctuating within the bands, with recent movement closer to the lower band. Considering the forecast for the next week, with prices ranging from $0.0576 to $0.0582, a cautious approach is warranted. Therefore, I recommend a long position strategy with a focus on capitalizing on potential upward bounces from the support level. The entry price should be $0.0576, coinciding with the initial forecast price and near the recent trading range. A stop loss should be set at $0.0569, just below the established support level, to mitigate potential losses if the price breaks down. The target price should be $0.0582, aligning with the upper end of the forecast range and a reasonable profit target given the current market conditions. This strategy combines the RSI, Bollinger Bands, and support/resistance levels to maximize potential returns while minimizing risk. Based on the historical data and forecast, Arbitrum has shown a fluctuating trend with support at $0.0769 and resistance at $0.0922. The RSI indicates periods of both oversold and overbought conditions, with the most recent readings suggesting a neutral to slightly bullish momentum. The Bollinger Bands have been widening, indicating increased volatility, and the price is currently near the upper band, suggesting a potential pullback. Considering these factors, I recommend a strategy that combines RSI, Bollinger Bands, and support/resistance levels. The strategy involves a long position when the RSI falls below 35 and the price touches the support level of $0.0769. The entry price will be $0.0769, with a stop-loss placed just below the support at $0.0759. The target price will be set at the resistance level of $0.0922. To refine this strategy, we will incorporate the Bollinger Bands. If the price approaches the upper Bollinger Band and the RSI is above 70, consider taking profits partially at $0.090 and setting a trailing stop-loss just above the lower Bollinger Band. This approach aims to capitalize on short-term price movements while managing risk. The final portfolio will prioritize the RSI-based strategy with adjustments based on Bollinger Band signals, aiming for a balance between potential gains and risk mitigation. This will involve an initial investment at $0.0769, with a stop loss at $0.0759 and a target price of $0.0922, adjusting the position based on Bollinger Band signals. Based on the historical data and forecast, FLOKI shows a slight downward trend over the past 2 weeks, with the forecast indicating continued downward pressure for the next week. The support price remains consistently at $0.0000209, while the resistance fluctuates around $0.0000215. The RSI has been fluctuating between 34.7 and 47.9, suggesting periods of both oversold and overbought conditions. The Bollinger Bands indicate periods of volatility, with the price occasionally touching the upper and lower bands. Considering these factors, I recommend a short selling strategy targeting a gradual decline. The entry price for this strategy should be $0.0000207, coinciding with the lower Bollinger Band and a slightly oversold RSI reading. To manage risk, set a stop loss at $0.0000210, just above the support level. The initial target price should be $0.0000204, aligning with the forecast price and a conservative profit margin. If the price breaks through the support level, consider adjusting the stop loss downwards to $0.0000206 and setting a secondary target price of $0.0000202 to capitalize on further potential declines. This strategy combines technical indicators and price action to maximize potential returns while minimizing risk. Based on the historical data and forecast, Bittensor has shown a volatile trend with periods of consolidation and minor upward movements. The RSI consistently fluctuates between 34 and 46, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price has been oscillating within the bands, suggesting a range-bound market. Considering the support price of $191 and the forecast price dropping to $192, a conservative strategy focusing on short-term bounces is recommended. Therefore, I suggest a strategy to buy Bittensor at $192 with a stop loss at $190 and a target price of $197. To refine the strategy, we can incorporate the RSI and Bollinger Band signals. If the RSI dips below 35, indicating an oversold condition, we can enter a long position at $193, setting a stop loss at $191 and a target price of $197. Conversely, if the price touches the lower Bollinger Band, it signals a potential bounce. In this case, we can buy at $192, with a stop loss at $190 and a target price of $197. This blended approach combines trend confirmation with momentum indicators for improved risk-reward ratios and a higher probability of success. Based on the historical data and forecast, Pepe shows a slight upward trend with price fluctuating between a support price of $0.000000280 and a resistance price of $3E06. The RSI consistently remains between 44.8 and 56.8, indicating neither strong overbought nor oversold conditions. The Bollinger Bands suggest periods of volatility, with the price occasionally touching the upper or lower bands. Considering this, I recommend a moderately bullish strategy. We will initiate a long position when the RSI dips below 50 and the price touches the bottom of the Bollinger Bands, which occurred on July 13, 2026, with a price of $0.0000270. The entry price will be $0.0000270. The stop loss will be set slightly below the support level at $0.0000260 to protect against a potential downside reversal. The target price will be set at the resistance level of $3E06, aiming to capitalize on the established resistance. To refine this strategy, we will incorporate the forecast data. The forecast indicates a continued upward trend, with prices expected to reach $3E06. Therefore, the target price of $3E06 aligns with the forecast. The RSI is not expected to reach oversold levels, so we will adjust the strategy to focus on the Bollinger Bands. We will maintain the long position until the price reaches $3E06 or the RSI reaches 80, whichever comes first. The final portfolio will be a long position with an entry price of $0.0000270, a stop-loss price of $0.0000260, and a target price of $3E06. This strategy balances risk and reward, capitalizing on the anticipated upward trend while protecting against potential losses. Based on the historical data and forecast, Pendle shows an upward trend with consistent support around $1.53. The RSI consistently fluctuates, but generally stays above 50, indicating a bullish momentum. The Bollinger Bands are widening, suggesting increasing volatility and potential for price movement. The forecast for the next week projects further price increases, reaching $1.65. Therefore, I recommend a long position strategy focusing on capitalizing on this upward trend. My strategy involves entering a long position at $1.56, coinciding with the initial forecast price. Given the established support level of $1.53, I'll set a stop loss at $1.52 to mitigate potential losses if the price reverses. Considering the forecast reaching $1.65 and the recent resistance around $1.59, I'll target a profit at $1.60. This strategy combines the upward trend, RSI readings, and Bollinger Bands expansion to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Jito shows a downtrend. The RSI consistently hovers below 80, indicating no overbought conditions, and has been dipping into the oversold territory. The Bollinger Bands are contracting, suggesting decreasing volatility and a potential for a breakout. The forecast price continues to decline, reinforcing the bearish outlook. Given this, I recommend a short selling strategy. We will enter a short position at $0.607. The stop loss will be set at $0.662, just above the upper Bollinger Band to avoid being prematurely stopped out by short-term fluctuations. The initial target price is $0.521, aligning with the forecast price for July 22, 2026. To refine this strategy, we can implement a dynamic trailing stop loss. Once the price reaches $0.58, we will adjust the stop loss to $0.58. If the price continues to decline, we will adjust the stop loss further to $0.521. If the price reaches $0.521, we will take profit and exit the position. This approach combines the initial short selling strategy with a more adaptive risk management technique, maximizing potential returns while minimizing losses. The overall portfolio will be 70% short selling and 30% waiting for a rebound. Based on the historical data and forecast, KAITO shows a clear upward trend. The price has been consistently making higher highs and higher lows, with a recent breakout above the 0.855 resistance level. The RSI values have largely remained above 50, indicating bullish momentum, with occasional forays into oversold territory, below 30, that have presented buying opportunities. The forecast for the next week projects continued upward movement, with prices reaching $0.998. Considering these factors, I recommend a long position strategy focusing on capitalizing on the ongoing bullish trend. My strategy involves a tiered approach utilizing RSI and Bollinger Bands. Initially, enter a long position at $0.849. Set a stop loss at $0.764, just below the established support level, to protect against a potential reversal. The first target price is $0.91, aligning with the first forecast price and a conservative profit target. If the price reaches $0.91, consider moving the stop loss to break even, $0.849, to secure profits. The second target price is $0.957, based on the forecast data and the potential for further upward movement. Finally, if the price continues to rise, set a final target price at $0.998, maximizing potential gains. This strategy combines trend analysis, technical indicators, and forecast data to achieve high returns while managing risk effectively. Based on the historical data and forecast, Pump.fun demonstrates a clear upward trend, particularly noticeable in the recent surge to $0.00201. The RSI consistently rises above 50, indicating bullish momentum, and the forecast predicts continued growth. The support price of $0.00191 provides a floor, while the resistance at $0.00219 suggests a potential ceiling. Considering the Bollinger Bands, the price has been trending towards the upper band, indicating increasing volatility and potential for further gains. Therefore, I recommend a long position strategy. Entry price should be $0.00175, with a stop loss set at $0.00168 to mitigate potential downside risk. A target price of $0.00195 is set based on the forecast data and the resistance level, aiming to capitalize on the ongoing bullish trend. To refine the strategy, we'll incorporate a dynamic approach using the RSI and Bollinger Bands. When the RSI dips below 50 and the price touches the lower Bollinger Band, it signals a potential buying opportunity. For instance, if the RSI falls to 45 and the price hits $0.00128, enter a long position with a stop loss at $0.00122. The target price should be $0.00163, aligning with recent resistance levels. Conversely, if the RSI exceeds 70 and the price approaches the upper Bollinger Band, consider taking profits or tightening stop losses. This combined strategy, blending trend analysis, RSI signals, and Bollinger Band dynamics, offers a robust approach to maximize returns while managing risk in the volatile Pump.fun market.